traders, I hope you're having a great weekend, and let's just think about what happened last week and plan ahead for next week. Last Monday's Traders Round Table was about getting position for the week ahead, so the whole of the video is going to be focused around that and getting you, helping you to look at what's going on inside these charts, and to help you think about how you can get positioned in the early part of the week, and hopefully put some points on the board as the week ticks by. And before I forget, the US clocks go back this weekend, so we're back to the 5-hour difference between Greenwich Mean Time and Eastern Time on Monday. A couple of things to note on the data. It's a really interesting week on the data. We've got a lot of Aussie data on Monday, but we've got Aussie rates on Tuesday, and they're expected to drop them. Okay, there's only an expectation, we don't know that's going to happen, so let's just wait and see. There is actually, unusually, there is quite a lot of data on Monday, because some of it's been pulled over from last week. So we've got some UK data, CAD and US data on Monday, and of course we've got the US election on Tuesday. So I'll start to talk about that in a minute, but on Thursday, just to finish off the conversation about data, we've got Euro and UK rate decisions. Nobody's expecting any change, but they can still create a little bit of volatility, which should be good for us. And on Thursday we've also got the US trade balance. So I mean, the markets are obviously very jumpy at the moment, so let's talk about what I'm seeing and how we can get positioned. Now, if you missed a lot of the action on Thursday and Friday, don't worry, because I think we're going to get a lot more volatility in the coming week, so let's just plot ahead for this. This is a 60-minute Dow chart. You can see how on Thursday we were just not doing a whole heap around here. A couple of hammers in there. These are overnight actually, yeah, these are in the Asian session. The Asians didn't do much with it, but it started it had a close above at 11 o'clock on the 60-minute chart UK time, and then it didn't look back from there on Thursday. It opened and just ran, and then on Friday we had good jobs data, but it touched the 50 MA. So the important thing is with that one is don't listen to the data and picture a trade. If anything, turn the data off, don't look at the data and see what the charts give you, because we have very high RSI up here, but more importantly it was a daily 50 MA up there and a daily resistance up there, and as soon as they opened it, had a little peak up in the first 5 minutes, and that was it. It was pretty much selling for the rest of the day. But look where we've come down to. We've come down to where we blasted up to on Thursday before that leap up on Thursday. So you can see, extreme volatility, and that's been very much the nature of these range-bound markets of late. And we get in the past few months we've had pushes down only to see the markets push up, but last week we pushed up only to see the markets push down again. So if you stick to the setups, and as long as you go into these markets with a plan, you should still be doing well out of these as a day trader. It's slightly it has been tricky at times as a swing trader, but I think that's about to change, and we'll go through that now. So while I've got this 60-minute chart in, what I'm looking for on Monday, I think we may drift back up to this resistance. We're in this box at the moment. We popped out of the box for a while and popped back in it. I am bearish this Dow, but I just think we may get a little bit of a bounce before they roll it over. So I would look to short up here. Excuse me. I would look to short this at 13,160, 170 area. I want a retest to this area here, a retest of this hesitation area, and Friday's daily pivot. So that would put us at 13,170 area, and then on the daily We've got on the daily we have, I can just call up the daily at the moment, my other screen. Right, so we touched the 50 EMA here. The thing to note is that we closed very fractionally under Friday's open, so it's not a wholly bearish chart, and we are trapped between the 50 EMA. These lows down here are the 50 EMA, and the high up here is the 200. So what I think will happen is if we break Thursday's low, then I think we're coming down to these fib levels here. I think we'll wind our way down to 12,800, go back to retest 13,000 possibly, and then come down to 13,600 and possibly down to this major support at 13,500. And if we can't hold 13,500, 12,500, if we can't hold this level here, then we're going back to some of these 2012 lows. Okay, markets come down faster than they go up, so you should be. I'm looking forward to getting short this market, and you can see 12,130 is a major pivot level from the daily chart, but 13,170, actually 13,170 is a level from the previous week, which I think we might just attack. And don't forget, we are between the 50 and the 200, which tends to be very choppy until we come out of that, which is why I think if on a break of that we should do nicely. So one way of trading it, if you're a swing trader, is just to short at 13,030. You're going to have a stop 270 points above. If you hold out for 13,170, your stop is much tighter. So I'm going to hold out as a day trader. I'm going to hold out for these highs up here, let the market open on Monday and see if I can get a short up there. So that's the Dow we're done with. Now, one of the better charts, another option for trading indices is this FTSE. Because this FTSE has a reversal bar, but obviously didn't see the same kind of action as the Dow because obviously it closes earlier. So I think on Monday, given the way the Dow chart looks, I think this will also come down to at least 57.87. If you short 58.28 with a stop up there at 58.95 at least, if not slightly higher. If the Dow continues to fall, I think the FTSE will follow, and we're at least going to see 56.80, and again we might hover around, hesitate around here, and then if the markets are very bearish, continue bearish signals, then we'll see these lower fib levels. I'll just pull back so you can see where I got the fib levels from. Fib levels are from the 2012 chart. So that's what I'm looking for in the FTSE. So you could bear in mind that the FTSE is lagging the Dow because of the time difference. In many respects the FTSE is a better short than the Dow if you are a UK trader, or if you're any trader. Let's look at gold. Gold is it's been consolidating up here. The key, if you get charts that do this, doesn't matter if it's a 60-minute chart or a daily chart, if you get charts that are trapped in a range, just look for sell signals like that, and that put a reversal bar right underneath that reversal on that resistance, and that's dropped through decent support there. So gold looks as if it could come down to 16.28. If you wanted to short that, then I would hold out for 16.97, which it may not pull back that far. It may only pull back to 16.91, and then hang on to it to see if we get down there. The thing against that short is we are quite low RSI down there. So I think there are some better charts. Now, I'll talk about the pound first. I am actually not going to short the pound at the moment. We're back under the trend line on the back of that star up there. I was hoping the trend line would hold and we'd pop back up, but obviously the sell-off on Friday put a pay to that. Again, we finished on major support here, so rather than short something that is on support, I've got some other charts which I think are more attractive, and we'll discuss those in a minute. The one I'm there is top of my watch list is this pound yen. So the dollar got bought and the yen stayed weak on Friday, so the fact that happens makes me very interested in the yen pairs. So I'm not going to trade these yen pairs, but I am certainly going to watch for, I'm going to look to see if the pound yen can sit on 128, or ideally I would like it to come down to 127. So I'm not going to short it, I'm going to leave it and see if we can find those levels, because on the daily, yeah, I think we matched Thursday's price action, and again very narrowly closed just inside Friday's open. So this has relative strength to me. While the market was selling off, this one held. So it's high up my watch list, because if this can pull back, the next time we come and touch this trend line, I don't think it's going to hold, and I would expect to see 134, perhaps 135. I'm very bullish on the pound yen. I did a video last Thursday which hardly anybody looked at, on major trends and major marks in the market. If you haven't seen that and haven't got a copy of it, let me know, because it's an in-depth analysis of all the big time frames in these markets, and there was some very interesting data that came out of that. So I'm a little disappointed I spent so much time on it and not many people viewed it. Go back in if you remember, go back in your emails and find it. If you're not a member and you want to have a look, I will be happy on this occasion to let you guys have a look at it. Okay, so because I think the pound is strong and the Aussie is weak, and I'll come to the Aussie in a minute, I really like this pound Aussie dollar. It's been consolidating since the 17th of October, the day after my birthday, and the fact we made a lower low there doesn't put me off at all. I think that's a stop sweep, and I think this is getting ready to go. And I would look for, well, I'm long this from the lows on Friday, posted it in the room, so I'm going to hold this with my stop at 154.18. If you're not in it, I would take a break of 155.25 with a stop under there at 154. If I'm right, just look at the fibs on the big picture. Yeah, so it's effectively a hammer just above the 50% fibs. So if we break out of this little pennant in the early part of the week after Tuesday, after the rate decision, then I think we could see these highs. Sorry, I know you can't. The 2012 highs are up there at 161.50. I know you can, so it's just above the camera there. So that's 650 points away from where we are, assuming we can break above. Got to close above 155.70 by Tuesday latest. Now, another way of playing this is to stand aside and wait and see if that happens, and then buy a pullback. But I'm already in it. I would suggest you might want to get in that. It has got, let me think, it's got 3 moving averages above it and the 200 EMA underneath it. So we touch the 200 EMA down here. So the safer way to play it is to at least give it one more day and see if that holds. But I just so you know, I'm in that. Right. So the chart. Again, I'm short this one. I posted it in the room on Thursday. I got short at these highs up here. I got short at 104 thereabouts, but now 103.36, and I would suggest you would want to get short 103.70. We may only see 103.50. I think this is going to pop down now. Got a trend line underneath it. I guess the danger is with this one, they don't change the rates, the Dow doesn't drop, and this pops back up. So we're right at the bottom of the fib zone. And I would expect this, I think this is coming down to the 127 extension, which is parity. So I'm holding on to this for parity. Alright, another way of playing it is to wait until we close under 103, under this trend line, and then short a pullback to see if we can come down to parity, by which time you may need a bigger stop. Right, and the other trade I've got for you is the US dollar Swissy. Huge move up, so we've broken a trend line. We're under the fib zone all along, well, Thursday, Friday last week, Wednesday, Thursday, sorry. Friday we bust up, so the pullback is 93.63. We have the 200 EMA just on here and resistance, but I think that's a safe trade. It's a relatively tight stop, 92.90. That to me is better than shorting the pound US, and even better short the euro US, which we'll look at in a minute. In fact, let's look at that now. Aussie CAD I talked about in the room last week a lot as well. I was short up here, had my stop a little bit too tight and got stopped out of this, but I'm in the Aussie US, so I'm not going to mess around and get in that as well. In some respects this is as good if not better than the Aussie US short. If you short it at 103.30, because the 50 EMA is down there at 102.27. When you get a new high and a close above, and that's a pretty dramatic, sorry, a new high and a close below, and that's a pretty dramatic close below, that is a clear short signal anyway. Not that you need any more confirmation, because that's quite some seller's bar there. Right, now quick look at oil. This has followed suit as well. So again, look at the consolidation pattern. Test the main resistance, and then a day later we get the drop. That is shortable at about 85.70. You may only get 85.25, and we could be heading all the way down here. These the dollar does get very bullish, and the markets do get very weak. This is where we are likely to fall, and so we've had one wave, two waves, three waves, A, B, C. So we're looking for a C wave up, and a D wave is normally the best wave down. Okay, so Elliott wave says that could be in for a nice drop, and that pretty much concludes what I've got for you in the markets as far as indices and forex is concerned. I'm now going to stop this video and do a completely separate stocks video, because I've got some juicy stocks for you, so you don't have to suffer that if you are not interested in stocks. So make sure you join me on Monday, and the subject on Monday is going to be trade less, make more. Actually, I've just remembered, Monday is fireworks night, and I'm out at a fireworks display, the village fireworks display. So I think this week, bear in mind we've got the US election on Tuesday, I think this week we'll do this on Tuesday night. Yeah, I'm going to do this on Tuesday night, so we'll have 2 days of trading behind us. So it'll be 7 PM UK time on Tuesday night for Trade Less, Make More. Alright, I hope you can join me, and see you then.